Hello everyone, I'm Lavpreet and I'm here to present the group presentation. Our group number is 18 and we are 4 members in a group, Chaman, Sakshi, Komal and me, Lavpreet. I will talk about the financial institutions and I will discuss the 4 types of financial institutions. First, I will talk about the commercial bank. The example of commercial bank is Oswald Bank Limited. Oswald Bank Limited is categorized as deposit taking institution and it operates in the banking market sector. The key business of Oswald Bank Limited is accepting deposit. The basic key business is to provide banking service like accepting loans, accepting deposit, foreign exchange, investments, and giving loan, etc. And the main source of income of Oswald Bank Limited is receiving interest from the loans. And type of financial institution is insurance company. The example of insurance company is Insurance Australia Group Limited, and it is categorized as an insurance and fund manager institution, and it operates in the insurance market sector, and the key business of this is underwriting risk and insure losses. And the main source of income of insurance company is underwriting income and investment income. The third type of financial institution is investment banking company. The example of investment banking company is ANZ Investment Bank, and it is categorized as a deposit taking institution like commercial bank, and it operates in the banking market sector as a commercial bank, and the key business of this is provide financial advisory service, and the main source of income is the fees received by advisory service and income from investment. Type of financial institution is investment funds. This is the example of this is Alternative Investment Trust, and it is categorized as no ADI financial institution, and it operates in financial service sector, and the key business of this is investing pooled capital of investors in financial securities, and the main source of income of this is sales charges. These were the 4 type of financial institutions, and the next presentation will be continued by my other group members, and next part will be continued by Sakshi. Thank you.
Good morning everyone. My name is Sakshi Narang and my student ID number is APS 3768. So now I'll start with analysis of financial management. What is capital budgeting? Capital budgeting is a process to evaluate potential projects or investment of a business. Capital budgeting is done to evaluate the benefit or loss that will be achieved from investing money in an opportunity or asset. So like capital budgeting can help in taking informed decisions which can help an organization to grow and increase its hold in the market. For instance, like on 12 May 2020, there was a news that Uber has reportedly offered to acquire GrabHub. This is acquisition, and before any such decision, capital budgeting is used by company to evaluate the benefit from such acquisitions. Moreover, GrabHub is involved in a business of food delivery service. So on acquiring GrabHub, Uber will become the largest US food delivery service. With its news coming out, GrabHub stock soared more than 35% in a single day. Like, that's interesting. Now I come to what is capital structure. So like capital structure is the combination of equity and debt used by an organization to finance its operations, where equity means the shares, common stock issued, and debt means the bonds or loan taken. So like shareholders are the owners of company, and the issues and issuing more equity means distributing ownership, and the cost of equity is higher as compared to the debt. While debt is a cheaper source of finance, but it also has a fixed obligation attached to it. Companies are required to balance their capital structure in such a way to reduce the risk and cost of capital. Moreover, Internet Corporation, a US-based company, enters into restructuring to strengthen its capital structure. whereas the main of the company is to reduce debt, extend maturity, and provide liquidity for growth. So Internap was facing problems due to its capital structure and hence decided to restructure the capital structure in order to reduce fixed obligation of debt and provide stability. Moreover, Internap is a great current example of capital restructuring that has happened recently and shows the importance of balanced capital structure. So now I switch to working capital management. So what is working capital management? Working capital management is the difference between the current assets and the current liabilities of an organization. So like working capital shows the liquidity of an organization. It shows amount available for day-to-day expenses. Also, low working capital means low liquidity for the company, and high working capital shows mismanagement of funds as funds is idle. So low working capital is a dangerous situation for a company, which is shown in this example. But like ESPN asked its commentators to take put cut starting from like 15% to 30%. Like due to coronavirus outbreak, there has been less income and the current assets like debtors and cash are not getting revolved. Hence, they decided to reduce the salary so as to maintain their working capitals. Thank you.
Hello everyone, my name is Chamandeep Kaur and my student ID number is UMM3054. Today I'm here to discuss with you about the listing requirements, advantages and hardship fees. So first of all, we will discuss about the advantages of being listed company on Australian Stock Exchange. The first advantage is access to capital for growth, and listing gives us an opportunity to increase the capital of our company. Second one is currency for external growth. So it will provide us currency in the form of diversified and liquid form. The third one is a higher public and investor profile. And the fourth one is improved valuation. So it gives us a chance to increase the valuation of our company in the market. And the next one is greater efficiency. So there are rigorous reporting of the company that are being listed on the Australian Stock Exchange. So it will increase the efficiency of the company. And another one is institutional investment. So in this, it helps in attracting the institutional investment. So due to that, the transparency will be increased. And the last one is it will provide reassurance to the shareholders and suppliers, as we cannot take any step without the permission of the shareholders, customers or suppliers. So next are the problems that one should consider while listing company on ASX. So the first is increased cost. So due to being an listed company on the ASX, the cost like initial fees, annual listing fees, these are all will be increased. The next is privacy. There is a problem with the privacy because there is loss of privacy because of media and interest and compliances. Next is liquidity. The liquidity may be affected because of volatile market and continuous fluctuation prices. Then is rigorous reporting. So the listed companies is subject to greater reporting and disclosure requirements. So thus it will lead to rigorous reporting. So the last one is shareholder approval. For taking any action or doing anything, there is a need to get an approval for the from the shareholder for the listed companies on the ASX. Next is what are the requirements for listing on ASX. So each company which wish to get listed on ASX needs to fulfill the following condition that are: it must have minimum 300 non-affiliated investors. Next one is the company must have free float of 20%. And another one is the company must pass the profit test. And the last one is the company must pass the asset test. It must have $4 million net tangible assets or $15 million market capitalization. So these are the requirements for listing any company on Australian Stock Exchange. What are the steps and you can say procedure for listing on Australian Stock Exchange? So the step one is appointing advisors, such as it could be lawyer, accountant, lead managers and investment bank we can appoint. that will give us any advice and suggestions regarding the listing procedure. And the step 2 is preparing the prospectus and due diligence. So it will include it includes information like right and liability attached to shares, financial position of company, etc. In step 3, we will commence institutional marketing. And so in step 4, we will lodge our prospectus with ASIC. So after 7 days, it should be made available for public review. And in step 5, we will lodge our listing application with Australian Stock Exchange. And after 7 days, with the lodge prospectus with ASIC, the listing application is lodged with ASX. And the step number 6 is marketing and offer period. In this, offer to retail investor is made. And for the last step, it is closing the offer. In this step, the offer will be closed and the shares will be allocated. So what are the requirements or what are the professional standards applied for a financial advisor? So he or she should have an approved qualification for being a financial advisor. The second one, he or she should pass the exam. And the third one is participate in 40 hours of continuing development per year. And the last one is he or she should comply with the financial planners and advisors code of ethics. These are all about what are the advantages, disadvantages, what are the requirements, and what are the professional standards to be a financial advisor.
Hi, this is Komal Rajpurohit. My student ID is SSS3070. I'm here to discuss financial advisory service. What is Essex Financial Advisory Register? Essex Financial Advisor Register is published in moneysmart.com, contains the detail of financial advisor who provide advice on complex financial products. It helps in identify the qualification, experience and capability of the advisor and whether he is authorized to provide advice or not. Who should be on the register, who should not, and who will maintain the register. The financial advisor who has their own AFC license and financial advisor who is also an authorized representative should be on the register, provided he or she is authorized and deal in relevant financial products. Any advisor who does not meet the financial advisor definition, for example, who provides general advice and personal advice on products that are not relevant financial product, cannot be registered. The Essex manages the register. It is AFC license responsibility to add and update information on the register. What information should be on the register? The register should contain information about the advisor like name, work history, qualification and financial product they can advise on. What are the relevant financial products for a financial advisor? Relevant financial products are products other than basic banking products, general insurance products, consumer credit insurance, and a combination of any of those products. What are the professional standards applied for a financial advisor? So, the following professional standard applied to a financial advisor. Number 1, have an approved qualification, pass the FACEA exam, participate in the 40 hours of continuing professional development per year, comply with financial planners and advisor code of ethics.